All right. Well, hello again, everyone, and welcome out to your US Non-Farm Payrolls Report class. We'll be covering the US Employment Report that's due just in about 15 minutes here. So let's get into it. What's the expectation? What's the game plan here? So looking at the numbers, and I always say, we got to look at the numbers, but then we also got to take a look at the sentiment. So the numbers are expected to be increase in the hourly earnings. Non-farm was supposed to be 184 versus 150, and unemployment was supposed to be at 3.9. So that is the expectation. So now let's just jump into and look at the sentiment. And before we do that, let's talk about strategies, because I get this question all the time. If you are a regular, you know the strategy. But if you're not, there's three ways to do this: enter on the news, before the news, on the news, or second stage. One thing you have to consider is that this is a Friday, and this is where we have a shorter time frame. So second stage doesn't really work as well because we have to exit the position by the end of the day, and it's just not enough time. So either we do it enter on before the news or on the news. So that will be the game plan. You got to realize that each strategy has its own pros and cons. Slippages are pretty common, especially in a volatile environment. We don't really see that as often, but if you have been trading for a long time, you know what I'm talking about. Fast moving, this is why we use a stop limit order instead of just a stop order, because that creates a window. So if the prices jump through that window, you don't jump in, you don't get triggered in that position because you put a limit on it. If you put a stop order there, and unless the price gaps higher, then you will be entered in the higher position. So that's the con of that. And the whipsaw. A lot of times we say, hey, let's just put buy stop and sell stop and at least see what triggers. That works well theoretically, but there will be times where you get this whipsaw where price goes one way and then it goes the other way. So what happens? You get triggered in both positions, you get stopped in both, and you take a double loss. So just realize that these news events are not as black and white or simple. They're tricky. You have to really know how to use a strategy. And the only way you can do that is by being consistent throughout time. That's the only way you can really master trading these news events. So let's get into it. Let's do a currency basket analysis. So I'm just going to jump into TradingView. As always, I'll be executing orders on my trade workstation. I'll be doing that on a separate screen because I can only share so much at a time. But I will be going through the process of what I'm looking at. So let's just start with the sentiment first. And I must say that lately it's been tricky to trade these news events because, we don't have a big move before it, which means that, boom, right away, the news comes out, it's going to be a big move one way or the other. That's what's happening. And a lot of times I get this question like, I missed a move and I don't want to chase anything. And that's the downside of it. By looking at a second stage entry is where you just missed out on some time, a big move that happens right away. So we will be tackling through that. Let's start with the equity markets. The equity markets looks pretty bullish, right? This is the daily chart. We are back at July highs. That's where we are. We haven't broken out yet, but we are still pretty solid. US 100 looks pretty solid. So the market looks pretty solid, right? So now let's take a look at currencies. Are the currencies reflecting the same thing? And this is what I pointed out in my currency recap yesterday. Oh, thanks for pointing that out. Hope you can see my screen. All right, so you can see on my screen here, all the equity markets looking good. Everything is positive in the market momentum wise. But now if we take a look at the currency baskets, we don't get the same picture. If you take a look at Aussie, it's a risk on currency. Are we seeing the same bullishness? We're not. Kiwi, getting a little bit bullishness, but it's not as bullish as what you're seeing. So the currencies are doing things on its own. They're not doing things as we want it to be based on that relative, the correlations. So here we are trading the dollar with this employment report. So what are we looking at the dollar here? Again, we are below the 20, we're below the 50, so dollar is clearly moving lower. But in the shorter term, remember, we are trading a shorter term price action today. We are not trading a daily chart. Right now, what we are seeing is a consolidation. Consolidation, 4-hour chart, it's consolidation. They're just going back and forth. So this is where I think the employment report can really go either way. It's a flip of a coin, and flip of a coin is never that great because sometimes based on what you flip, either you're gonna be right or you're gonna be wrong, and I think that's where we are with this news event. So let's go through and see what the expectation is, what the bias is. Personally speaking, my bias is going to be more on the US dollar long side. I think the employment report might come out better than expected. If you take a look at the historical speaking, this is a good time of the year where there's everything is sort of kicking high gear. So even though if it comes out in line with expectation or higher than expectation, I think the dollar can gain briefly off of that, because again, right now it's a flip of a coin, like I said. So what can we do as far as the pairing goes? Let's just start with our look at the strong versus weak. So clearly Kiwi looks the weakest right now. You can see clearly it's not the best looking chart because we're just doing this crossover right over here, but we are slowly moving lower. But that's a moving currency today. But if you take a look at what looks the best based on the chart, I think it's the euro. Take a look at euro. How nicely euro has just collapsed now back to the levels from October. So if I really had to pair, I think I want to pair euro against the dollar onto the short side. So let's take a look at euro USD. So this is the first one that I just went through the whole list, and I like this better. Like I said, it's a flip of a coin here. I'm not going to be a genius to make the right call here. It's literally 50-50. So if I had to jump on this, here's the game plan. Want to short right below the support here. Again, this is a good setup on a 4-hour chart. I'm not even looking at a shorter term 15-minute chart. I'm looking at a 4-hour chart. This looks like a good setup here. We have the moving averages that's putting some pressure right here underneath. So what we can do is that have our sell stop right below that 107.56. Maybe I'll maybe move it down to 107.50. That will be my sell stop order. And as far as my take profit order, I can use this the 20-day moving average as a stop. So my stop will be right above it. It's a 107.93. I can even go down to like 107.97, 107, 108, depending on how liberal you want to be by the stop. But that's what I really want to follow. So that is my game plan. I'm just going to quickly jump in, enter that position on my trader workstation. Realize that you don't always have to go with the full position size when you're trading a news event. A lot of times you get this, you're not sure, you don't want to risk too much, or you think your stop is too far. Cut down your position size. You can always leg into a position later on. That's the key, that you can always jump in later on. But sometimes if you're not as 100% confident, like I said, is it a flip of a coin? Now I need to be more diligent. I don't have enough time. It's a Friday. I can start with a smaller position size and not really affect me as much. And later on, I can add on to it. I know some traders, let's say if I have a bias, I really like euro dollar, I can start with a half a position size right now and enter when it breaks that 107.50. There's different ways to do it. It really comes down to a trader. I'm going to be using a sell stop at 107.50 right there. And if it fills me through, I will see. If it goes the other way, that's fine. Like I said, it's a flip of a coin today. But that's what I like here. Let's see if you have any other pairs that you're looking at. Let me know. But so far, I mean, that's what I like the best. Again, I'm not going with the Kiwi dollar because, like I said, Kiwi is still looking better, even though there's this weaker for the day. It's still pretty weak there. So outside of that, are we seeing anything screaming buy today? I think CAD looks stronger, but again, look at how messy the chart is. I think that's a problem. Is you look at things around and you don't really find the best looking chart. So you just really have to go with what's moving. Euro is just the best looking chart here, even with the Swiss franc. But I think Euro looks the best here. So let's just hold tight here. Let's take a look at how things move, and we'll go from there. And again, if it turns out to be a loser, that's fine. It's just one of the many trades that you're going to make, especially around the news event. But none of these trades should be, make it or break it to your account. This is just one of those trades that you'll be making. So let's see how things goes. Again, we're just going with, we just picked a side. A lot of times, let's say if you don't want to go through it, you can always look for an enter on the news. But what happened is that there's a lot of, sometimes the price actions move so quick. And that's what we have seen lately. The price action moves so quick that it just doesn't give you that opportunity. So either you put your sell stops and you just hope that it goes your way, or you miss out and you just look for something the following week. Last report had a massive move on Friday. So That's where we are, and that's why I was actually considering maybe doing a half a position size before the position size, before entering, before the news event. But in this case, the setup looks so decent. Where if it does break that 107.50, we have a good looking setup here. But a lot of times you don't get a good setup, and you just like you know. Uh, Drawing the lines in the sand, like look at Kiwi dollar. If I enter this right now, like it's just not a good looking setup here. I can enter this on a break below that 161.24. That'll be the other one I'll be taking a look at, especially if the move goes my way. You can always use a legging in strategy. If things are moving your way, move your stop lower, and you can leg in. That's a game plan. So we are less than a minute away, minute and a half. So we'll be doing a countdown here. Let's go through the questions here. Let's see. Dollar CAD. Again, I'm not really a big fan of dollar CAD here because, again, I'm trading the dollar and the CAD are tightly correlated right now. There are days where they go uncorrelated, but they are mostly correlated. So let's take a look at the pound dollar as well. You can see that a lot of these setups could drop off if the dollar strengthen. I mean, a lot of these ones that we can put a sell stop here and see if it gets triggered. The one thing that we don't want to see is a whipsaw. And what's a whipsaw? You get a big candlestick right down here, and then it just moves back up. So that's the price action we want to avoid, and that's why a lot of times I pick a second stage entry. But because it's a Friday, you get this big move, big burst, and then just nothing happened for the rest of the day. A lot of times, that's a missed opportunity. So let's see how things goes. The bond markets are the bonds are gaining a little bit here. The equities are flat to slightly negative. I think this is markets doesn't have a momentum here, so it's just going to be reactionary to the news. So let's see how things turn out. We are about 20 seconds away. And I got another question. What's the target? I mean, if you see that, if we break this low here, which is the previous high right here, oops. I mean, we're looking at about 107. 107 will be the first level of support. All right, 4 seconds. Let's see. Okay. Initially, right there, move goes in our way. Let's see. So we are now triggered into the position, and I'm just looking at things across the board. I mean, I think our hunch was right. This is, let me just take a look at the numbers. Things are moving well. There you go. Perfect. So see, that's why it's good to have something beforehand, especially on a Friday. You get this one-way move, no whipsaw, just a clean break. The equity markets, let's take a look at the numbers. I'm assuming that this is a positive jobs report. I won't be surprised. Yeah, a non-farm payrolls is at 199 versus 184. And look at that, unemployment dropped to 3.7 versus 3.9. So guess what? Bullish report, positive for the dollar, positive for the bond yields. That's where we are. So that's let's take a look at the equity markets quickly. I think I like the dollar long here. I mean, we are already in a position, and look at that. It's just beautifully moving. US 500, let me take a look at that. So the equity markets are weakening a little bit. You can see they're not falling. But again, I think this is more about the dollar. It's not more about the equities. I mean, this is a positive job support is still, showing that the economy is doing well. But the real question here is what the Fed's going to do. And that's why these news reports are very important, because what the Fed's going to do. Now, this puts pressure on the Fed. Hey, economy is still strong. We can't cut. Remember, the markets are expecting rate cuts now going to next year. And that's where we have such a disconnected markets, is that the expectation, at one point we're expecting stronger markets. But on the other hand, we're also expecting weaker markets because the rates expectation are dropping. So I think that's where we are seeing that teeter-totter, and one side wins always the other. And economy still hasn't weakened, but this still puts the pressure on the Fed to continue being on the strong side, continue holding rates longer, or maybe raise rates if the inflation goes up. I think that's really where we are. So let's go back to our Euro USD position. So we have we got a decent move here. We're getting a little bit of a wick here. The question is, okay, when do I move the stop? I want to at least wait for this candle to form. This is where, if you want to use sort of a quick stop management, let's say you don't want to give it too much room, you can bring your stop down to 107.70. At that point, you're only risking 20 pips. The question always the fear is always that, oh, this is going to reverse back up. And if it does, we started off with much bigger stop loss, and now we are at a smaller stop loss. You can always do that. But like I said, every trader does it differently. Right now, the data is supporting the US dollar here. Let me show you what the bond yields are doing, because again, this is a good environment to look at bond markets too, and look at the bond yields. The 30-year just shoot up, 20-year shoot up, 10 years. So again, bond markets are going up, which again helping the US dollar to go up. So what kind of legs it's going to have behind this, we'll find out. This is still the early stage of the move where it's still deciding. But again, take a look at all the dollar crosses. Look at the pound dollar, it did fell. Aussie dollar did fell, Kiwi dollar. So it's a pretty broad move against the dollar. So that's really where we are. I don't mind just holding this and just exiting by the end of the day. Like I said, if this is a one-sided move, this might just continue dropping, and when the momentum is over, we can be out. So that's the game plan. If you have any other questions, let me know. Otherwise, we'll wrap it up. I think we're kind of done here. Right now, it's more about management here versus taking a look at new opportunities. So continue watching. If you look at something at a second stage entry, just realize that it's a Friday. You have a shorter time period, which means that if you're not planning on holding things on the weekend, let's not enter something that might not, you're sitting in a position, it's not developing, and then you are stuck in a position. So always be mindful of that. So thanks for joining. Again, glad it worked out. We'll be back next week, continue with the schedule, but have a good rest of the weekend. Happy trading, and we'll see you guys next week. Cheers.